Hello, welcome to Business Incorporated. I'm Ladi Williams. Coming up on the show today, Kenya plans debt fund to avoid biting cash crunch. And IMF says fiscal policy will support Mali's near-term economic recovery. And Egypt receives second shipment of Chinese coronavirus vaccine. Let's get the show started with intraday market figures from the African continent, which were all in the negative territory. South Africa's GSE took the heaviest hit, falling 1.2%, while Nigeria's index was marginally lower by 0.02%. Elsewhere in the region, the EGX 30 declined 0.53%, and Kenya closed positive on Monday. And major Middle Eastern markets were in the green at intraday, except the Qatari index, which fell by 0.64%. On the other hand, the Saudi Arabia's index jumped 0.77%. The UAE, Dubai's market was up 0.18%, while Abu Dhabi's index rose by 0.17%. And European stocks struggled for direction this morning with investor focus on coronavirus development, economic recovery prospects, and the outlook for inflation. Let's talk to Ashutosh now for more from the European scene. Hello, Ashutosh. Thank you for joining us. And Microsoft has announced it will work with European news publishers to set up a payment system similar to Australia's proposed news scheme. What do they hope to achieve with this? Hello, Ashutosh. Can you hear me?
I have a very bad connection. Could you please repeat the question?
Okay, I said Microsoft announced it will work with European news publishers to set up a payment system similar to Australia's proposed news scheme. So I'm trying to know what they're trying to do there.
Yeah, so the European Union actually had reformed its copyright rules in 2019, calling on big tech firms, the online platforms like Facebook and Google, to actually sign some sort of commercial deals with people like publishers, musicians, and filmmakers, so that they could be compensated for the content that was being used and consumed on their platforms. Now, Microsoft and the other news publishers, they say that that rule does not go far enough. I mean, it does not guarantee that these news publishers are going to get a fair deal from the big tech companies. They say that the smaller publishers in particular do not have the heft or the financial power to actually ensure that companies like Facebook and Google reach a fair deal. And that's the reason why they're calling on authorities to call on these big techs actually and require them to actually seek arbitration when they are unable to reach some sort of an agreement with a small publisher on how to distribute or how to share their revenues. So this is what their demand is. So basically what they're trying to achieve is a fairer ground for smaller publishers.
And still looking at big tech, Facebook has agreed to lifts its news blackout on Australian pages after the country made changes to its proposed law. What's prompted the U-turn from Facebook?
Well, I think Facebook actually found that perhaps it had got what it was seeking, or maybe they reached some sort of a compromise. The government in Australia has said that they are going to bring in some amendments to the law, the proposed law, and that's the reason why Facebook is pretty satisfied with the outcome. And they in fact said in the statement that the government has agreed to a number of changes and guarantees that address their core concerns about commercial deals and recognize the value of our platform that it provides to publishers relative to the value we receive from them. So they've maintained from the very beginning that it's the news publishers who are using on their own volition, they're using Facebook to reach out to wider audience. It's not the other way around. Whereas in case of, say, Google News, it's Google which is deciding which news is going to be put at which position. So there's this difference, and this is what it was trying to actually outline during its discussion with the Australian government. But there's also an element, I feel that it's also about the fact that Facebook did realize that the ban, the strong action had become some sort of a PR fiasco for the company. It had led to some really strong reactions from different countries, the UK, Canada, the European Union, and all these countries, mind you, are actually looking to rein in the powers of big tech companies, including Facebook.
Can imagine big tech is really pulling some weight these days. Well, rising inflation and rising bond yields are worrying the markets. What do European authorities have to say on this?
Well, the ECB's Christine Lagarde said that they are closely monitoring the rising bond yields. There is a lot of expectations that perhaps when the restrictions are lifted, when there's a vaccine fuel recovery, that's when there's going to be inflation. And because of those concerns about inflation, we are seeing this bond yields rising. And rising bond yields could actually scupper any recovery in the process, because that would just increase the borrowing costs for companies and others. And we all know that it is the banks actually use public debt, the sovereign debt, as a reference to price in their own loans, or how when they set the interest rates on the loans. So when they go up, then of course the interest rates on loans are also going to go up. So that's a worrying sign, and that's the reason why experts say that perhaps the ECB would, in this case, step up its buying of sovereign bonds.
All right, I guess we'll keep monitoring the market. All right, Ashutosh, thank you for the update, and do enjoy the rest of your day.
Thank you.
And in the UK, unemployment numbers are out at 5.1% between October and December 2020, which indicates a rise for the first time since 2016. Let's talk to Juliana now for updates from London. Hello, Juliana, great to have you. And recent data shows unemployment rate hit 5.1% in October, December. How is the market reacting to this?
Hi, Laddie. Well, the FTSE All-Share actually started off in positive territory at early trading, but it's since declined into the red. I've got to say, it's nothing to do with the slew of economic data that we've had out of the UK. They appear to be focusing on what happened in New York overnight, where we saw a great tech sell-off, especially now we've got this Facebook news about the U-turn in the Australian news ban, that perhaps that's spooking investors, which is why the FTSE All-Share is down. Going back to that unemployment data, it's fair to say that the furlough scheme over the past 12 months has really kept a lid on the labour market. We did have that 0.4% increase in the amount of people who were unemployed in the last quarter of the year. But it was a mixed bag of news, because it has shown that consecutively more people are getting into employment. So between December and January, 88,000 more people were in jobs, still affecting the youth demographic though. So between the ages of 16 to 24, you were more likely to have lost your job. And according to the statistics from the Office for National Statistics, over 770,000 people have lost their jobs in the pandemic. So the numbers now, the FTSE All-Share is down 0.16%, the FTSE 100 is down by 0.36%, and the domestic market, the FTSE 250, that's up by 0.52%. In the currencies market, the British pound still continuing its rally. It's up on the US dollar by 0.14%, up on the euro by 0.18%, and up on the Japanese yen by 0.37%.
And the economists are projecting a jobless rate could hit 6.5% this year. What are you hearing about this?
Well, it's possible. I think all eyes now are focused on Chancellor Rishi Sunak next week, Wednesday. He is going to be delivering the spring budget. It's, he's got a lot of pressure on his shoulders because the furlough scheme, which has been keeping the labour market afloat, that's been paying people to stay at home. There are about 4.5 million people that are still on that scheme. And even though the Prime Minister Boris Johnson outlined this roadmap to getting out of lockdown, it is still going to take some sectors a couple of months to finally be trading again. So even though a deadline has been put in April to lift or to remove a furlough, of course, union bosses, business leaders, lobby groups are asking the Chancellor to consider that, because if he does lift it in April, then there could be a tsunami of job losses. He hasn't confirmed or denied, though, after the ONS released the unemployment statistics today. He did say that, safeguarding jobs and livelihoods was something that the government want to do. They want to make that a priority. So we will be expecting to hear from him next week, Wednesday, and hopefully then he'll announce that the furlough scheme will be extended.
And looking at the markets, I see travel and hospitality shares surging, and tech companies like online grocer Ocado are down 4.3%. What is actually happening here?
Well, what's happening is that the British holiday makers are, going online and booking their summer holiday. I did have a quick look before I went into the studio, but the prices are so high, I dare not book yet, laddie. But people are doing it, TUI and EasyJet, they're reporting that as soon as Boris Johnson finished his televised address at 7 o'clock yesterday, bookings skyrocketed by 600%. And so according to, the Prime Minister, if all goes to plan, then by the 21st of June, all legal restrictions will be lifted, which means people can go on holiday, which is why we are seeing the likes of EasyJet, TUI, Wizz Air, all their contemporaries, as well as Intercontinental Hotels, IAG, the parent owner of BA, their shares are all up between about 4% and 8%. But, those who have weathered the storm through the lockdown, the likes of Just Eat Takeaway, Ocado.com, all of the delivery giants, they're seeing their shares fall. It ebbs and flows, doesn't it, laddie, in the business world? Yes. And now it's the time, hopefully, for the airlines and the holiday makers.
Anyway, we'll see if the rally can be sustained. Anyway, thanks for the update. And let's see if you can book that, travel plan.
Thank you.
All right, thank you. And shares in Asia Pacific were mixed today as investors monitored technology stocks regionally after their counterparts declined on Wall Street overnight. Mainland Chinese stocks were lower by the close. The Shanghai Composite was down 0.17% at 3,636, while the Shenzhen component dipped 0.61% to 15,243. However, Hong Kong's Hang Seng Index gained 1.03% to finish its trading day at 30,632. South Korea's Kospi declined 0.31% to close at 3,070, while in Australia, the S&P ASX 200 edged 0.86% higher to finish the trading day at 6,839. MSCI's broadest index of Asia-Pacific shares outside Japan rose 0.36%. And markets in Japan were closed on Tuesday for a holiday. And major U.S. stock futures were negative today. Futures tied to the Dow Jones Industrial Average Index declined 0.21%, while the S&P 500 futures fell 0.61%. The heavy tech NASDAQ shaved off 1.57% after falling 2.5% on Monday. And oil prices jumped by more than $1 earlier today as U.S. output was slow to return after a deep freeze in Texas shot in crude production last week. Brent crude was up 1.6% at $65.30 a barrel after earlier hitting a high of $66.38, while U.S. crude rose 1.4% to $62.51 a barrel after hitting a session high of $62.73. Both benchmarks have risen more than 1% after climbing nearly 4% in the previous session. Shale oil producers in the southern United States could take at least 2 weeks to restart the more than 2 million barrels per day of crude output that shut down because of the cold weather, as frozen pipes and power supply interrupted slowed their recovery. And domestic commodities market update is next. We'll return from this break. Do stay with us. And on commodities market updates, we're talking shea butter. Shea butter is fat that's extracted from the nuts of the shea tree. It's solid at warm temperatures and has an off-white or ivory color. Shea butter is known to have a large number of health benefits, and over the years, there have been an increased demand for shea butter. Joining me now to talk more about this is Mayowa Ige, a research analyst at financial derivatives company. Hello, Mayowa. Thank you for joining us.
Hello, thank you for having me.
Great to have you. Nigeria, which currently produces an annual volume of 370,000 tons of shea nuts, earning $5 million from shea exports, has a potential production of 800,000 tons. In light of this, how can Nigeria increase her production capacity and diversify her revenue source?
So the major challenge with shea butter production in Nigeria is the fact that is a poor quality of our processed shea butter in Nigeria. And this is as a result of the lack of modern processing techniques and equipment in Nigeria. Most of our farmers are rural farmers and they don't have the right equipment for processing shea butter. So for the government to increase their production, they need to address the poor quality of our shea butter, and then that means that they need to actually provide mechanized processing centers for our local farmers and shea nut pickers to process shea butter. And also there are other challenges that affect the agricultural production in Nigeria generally. We have poor storage facility, poor road infrastructure, and all these issues also need to be addressed by the federal government, and this will help boost our local production of shea butter in Nigeria. And there's also the problem, lastly, there's a problem of indiscriminate felling of shea butter trees. If the government can actually enact bylaws to stop this indiscriminate felling of trees, it will help boost our production of shea butter, and the government would actually be able to achieve their revenue target of $100 million annually from exploitation of shea butter.
I guess it's still the same old problems. Looking at the health benefits now of shea butter, do you think it's the reason for the increase in demand? Is it purely because of the health benefits, or is there more to it?
Well, largely it's as a result of the health benefits. Shea butter is used in various industries, especially in the cosmetic industry. It has chemical components that actually help boost the demand for it, and that's why it's used in a lot of industries. So it's a major factor. There's also been another factor that has driven the increased demand for shea butter. There's been a supply of cocoa yields in major cocoa producing countries recently, and then most chocolate and confectionery manufacturers have had to source for an alternative, a healthier or still healthy alternative for cocoa butter, and then they have come up with shea butter. So this has also contributed to the increase in demand of shea butter that we're seeing in recent times.
And despite being the largest producer of shea nuts in Africa, Nigeria ranks 4th in terms of exports among the African shea butter exporting countries. In what ways can the federal government incentivize local producers to increase shea butter exports globally and within the AFCFTA trade zone?
So the federal government already has a roadmap addressing the challenges I mentioned earlier, but to boost exportation, which is mainly dependent on the processing aspect of the value chain, the government actually needs to partner with the private sector. They need to come into joint ventures with them, either provide a land for processing, the private sector would provide the equipment, things like that. This will help boost processing of shea butter, and then we have more to actually export, because we export only, we actually process only about less than 10% of the shea nuts that we produce locally. That's how much we actually produce of shea butter we actually produce in Nigeria. So having this partnership may actually help, also providing credit facilities to the stakeholders in the value chain would actually help boost shea butter production, and it will actually help us to have more produce to actually export globally and within the AFCTA region.
All right, Maiwa, well, diversification is really needed at this time. Anyway, thanks for the update, and do enjoy the rest of your day. And South Africa's unemployment rate increased to 32.5% in the fourth quarter of 2020 compared to the third quarter, according to the Statistician General Risenga Maluleke. This comes a day before the much-anticipated budget speech by Finance Minister Tito Mboweni, who will be expected to tell the country how the current economic situation in the country can be made better. Speaking to Channels Television in Pretoria today, Mr. Maluleke says the country has recorded the highest unemployment rate since 2008, an increase of 1.7% from previous quarter of 2020. Do take a listen.
That unemployment rose by about 1.7 percentage points from the previous quarter, which is third quarter of 2020. And we'll remember that the unemployment in the third quarter of 2020 was sitting at 30.8%, and that accounted for 6.5 million people. Now, where we are seated, we have 7.2 million people actively looking for employment, and as such, they represent 32.5% as the unemployment rate. Of those 7.2 million people, plus the 2.9 million people discouraged work seekers, as well as the 1 million people who didn't look for employment for other reasons, but if employment became available, they would have taken it. Those people come to 11.1 million, and that 11.1 represents 42.6% as our expanded unemployment rate. Now, who are the most vulnerable to labor markets? It's young people.
And the Kenyan government says it will create a special fund for settling of fast-maturing loans from the financial year starting July in a bid to mitigate future cash flow challenges arising from heavy repayment of debts whose grace period has expired. The National Treasury says it will gazette rules for establishing the fund to specifically pay off maturing debt, buy back bonds when interest is low, and retire some of the debts early to avoid higher costs in the future. And this comes at a time when debt redemptions is projected to jump 65.17% in next two fiscal years to 493.12 billion shillings in June 2023 from an estimated 298.55 billion shillings in the current year. And the International Monetary Fund says fiscal policy will support Mali's near-term economic recovery through a more gradual return to the regional West African Economic and Monetary Union deficit ceiling. According to the IMF, reforms are needed to increase tax revenues and address emerging structural fiscal pressures on the wage bill, subsidies to public enterprises in order to safeguard developmental, social, and sustainable objectives. The IMF adds that digitalization will support better revenue administration and public financial management. However, the fund says a combination of health, economic, socio-political, and security crisis has posed policy challenges for Mali. And that's it on Business Incorporated. Thank you for watching. I'm Ladi Williams. Bye for now.